getting near October, right? And it still hasn't been getting any colder. What's with that?
Time's been going by fast. Wasn't it just like August? It was like August, like 2 weeks ago, man.
It felt like 2 weeks ago, right?
Yeah, it's
time
going
has
by
been going
fast.
And it hasn't been getting any colder either with the weather.
Yeah.
Noticed.
It's before, like last year it was really cold right away.
Right? Last year during November
windy
time,
and it like rained a lot.
Yeah.
Maybe we'll have to see this winter.
it's still like 90 degrees in here at Cali, so global warming is the real deal, people.
Is it?
Global warming is the real deal. Yeah.
So, Mr.Cheeze, what got you interested into the stock market?
Well, I wanted to have more financial freedom. So if you Google how to gain financial freedom or like independence, you can see that a lot of people invest their money instead of spending their money in order to gain financial freedom. Now, I looked it up, and also like around a year or two ago, I was actually interested in the stock market. I put like around $1,000 into it, so $1,000, and I just kind of left it there for a month, and then when I returned, I just left it there for a month, and then I just returned. I made like I think it was like $100 profit. Yeah, so I didn't even I wasn't even like looking at it. I forgot that I even put it there, and I was like, all right, shoot, that's good enough, and I took out that $1,010.
What time was this?
This was last year.
So was it bullish? The market bullish?
Yeah,
in that
the
time?
market was really bullish. This was in the time where like Alibaba was like 140, and
How much was Apple?
Apple was like, I think it was like 180 something. Yeah, Apple was cheap a year ago. And then I didn't buy any Apple though because it was out of my range. So just that and like me not putting anything, like I didn't even do any research. I just looked at the best stocks and I just bought the cheapest one at the moment.
Which one was it?
It was like Alibaba. I bought a couple of Bank of America and Spotify, Dave & Buster. Yeah, those four. And then like now, I'd say like 3 months ago, what really got me into investing was just me actually getting more mature and me wanting to spend my money into an actual investment where I can get money back. So that's what really made me start into investing and like getting into the stock market was for me to gain financial independence by putting the money that I make and that I earn into something that could make more money for me potentially. That's what really got me into this.
Wait, so how much were the prices right now of all the stocks that were they increasing?
Oh, hell yeah. So everything that I bought a year ago compared to now increased to around an average of 20%. So you see that like even if you say like I kept that stock and I just left it there for a year and didn't even touch it, I think I would have made like $500.
Just like, keeping it in your account.
Just keeping it, yeah, for a year.
So long-term holding one of the smartest ways?
Long-term holding is, I believe the safest way.
If you pick
the right stock, yeah. If you pick the right stock, I think it's the safest and most safest in terms of getting your percent profit back.
I see.
For you, how did you what made you get into the stock market?
So first, I remember last year, I know my father was he invested in the stock market a lot, and then he's been in the stock market for around 15 years.
That's a long time.
And he used to be a broker too, so he knows, like, he used to tell me that all the people during that time, they would just lose money.
Dang.
Like, broker always wins.
Broker always wins?
Yeah, so like, when he entered, like, he would lose a lot too, so he had to switch his strategy. So like, that kind of interests me, like, just knowing that. But when I was asking him questions about the stock market during last year, the winter, I didn't even know what Dow Jones was or S&P or NASDAQ. I didn't even know what that was. I was asking him, what are those? Like, why did they have that?
Yeah.
What is the reason to have that? You know? But now, as I'm a trader now I know that it's different. Like, you know why they have it because you track the performance of the economy, essentially, with all the top companies.
Yeah.
So I got interested because he used to tell me about, like, I see him watching stocks every day. So I was just like, why is he checking that every day? And then he looks at I don't ever see him charting, but I just see him looking at the stock on his phone, like just the prices. Like he just looks at the price. And
One thing I want to put in that, like, if you see like real traders and investors do, like the really good ones, the really professional ones, a lot of them don't chart. And I think why is because the charting is just historical patterns that might reoccur in the future, right? It's just a possibility. However, you're just tracking down the historical patterns that I had into, and then you're trying to play it out, or like trying to figure out the possibilities of that pattern reoccurring into the present and future.
I want to add that I never see him use trend lines as a trader or investor. He's an investor because he doesn't trade a lot. He only trades 2 to 3 times a year, but he makes like 2 to 3. But it depends if it's a really good deal. If he bought in and it goes like 40%, then he'll sell. Like if it's 3 days and it just went up like 20, 40, like he'll sell.
He's an investor.
Yeah, he buys when Dow Jones is at support.
That's good.
So like he doesn't buy right now. He said he would never buy it. He wouldn't buy right now.
Yeah, just wait for the support lines, right?
Yeah, he's just waiting because it's consolidating. It's not going higher highs on the price action because there is growth when Dow Jones or the major indexes have at the lower support lines. When they're at the support, they have more growth. Because if you buy at the resistance, there's not much market growth in general because it's just at an uneasy time, at the all-time highs. No one wants to buy higher because people could sell at the limit. It's just very volatile at the not it's very. It involves a lot of consolidation essentially, and there's no growth, upwards growth. It's just waiting to decide if we're gonna go up or down, on the resistance lines.
Yeah. So why would you want to risk that, right?
Yeah, exactly. So like he would invest in TVIX right now. He said anything under $10 for TVIX he would invest in. It's just basically that. It's when it'll gain when there's shock or fear in the market. Because it's super cheap right now. I used to be trading like $14, $17 before, even higher. But now we're at all-time highs or all-time lows right now for TVIX. But that's just an example. He wouldn't buy a growth stock at the moment or for long term because he would hold it for some time or trade it.
Yeah, so it's better to buy at the support line. That makes sense.
Yeah. But he also uses RSI. That's the only indicator that I see him use, RSI.
Yeah.
But I never see him draw trend lines or anything. So that's something interesting. Like I use trend lines a lot heavily. But to see him, he's successful. He has a different style, so it's just very interesting that he has his own way and it's very successful for him. But he doesn't use doesn't use a lot of TA. Just uses buy low, sell high, and then RSI. Good RSI.
Probably looks at upcoming earnings.
Yeah. And the potential of the growth, the value, like you said, he does fundamental analysis as well.
Yeah.
Potential of the company. In the past, has it grown a lot? For 5 years, has it went down and came up a lot of times?
Yeah.
So he'll buy those kind of stocks.
Yeah, that's good.
So that's just his style.
You're supposed to do that.
Yeah. He doesn't have to draw a trend line because it's just right. He just looks at
buy
the
the support. That's why you doesn't need to draw trend lines. If you buy at the support, then there's no way it's gonna go, like, even if it does go lower, it's probably gonna go a bit lower because it's not gonna go like 10% below the support line. Very unlikely that it's gonna go like 10% below the support line. So when he buys at the support line, he could just he literally probably just chills and then waits for Dow Jones or like the other markets to just pick back up and like go bullish, and then he just makes money off that.
Yeah, and he, like I said, he only does 2 to 3 trades on his long-term picks, like 2 to 3 trades per quarter, or exactly.
Did you guys hear that? 2 to 3 picks, stocks, 2 to 3, and what he probably does is he probably starts dollar costing average from those 2 to 3 stocks. So he doesn't look at other stocks. He just keeps track of those stocks and keeps buying more of them or selling more and then buying more. Like he probably just keeps dollar costing average and then sell, or dollar costing average the other 2 or 3 that he's in.
Yeah, and he looks at the all-time chart. He doesn't look at the 5 year. He looks at the all-time. How many times? If it went down 4 times, did it go up 4 times as well? Those are the kind of stocks that he'll pick, and he makes sure those companies have growth in them still.
Yeah.
So he checks those to see if those are at the bottom.
Yeah.
and he watches those closely, and he does fundamental analysis as well. Just make sure that they're constantly in profits every quarter, and that's how he basically chooses his picks.
That's good.
So, what was your first strategy when you first got into stocks?
Well, I didn't really have a strategy when I first started. So what I did was I just looked at the yearly, like your dad did. I looked at the yearly and the all time, the 5 years, and then I would just look at whichever one was at the lowest point, and then I just buy that one. And if I knew that company, I bought like Alibaba and Spotify and Bank of America because I knew those companies were very good. Like they're great companies, and plus they were at the low point, so they were at near the support line, or they were around the support line level. And so I bought it because I knew that these companies had potential of growth since they've been around for so long, and that's why I bought it. I just decided to keep it for around like a month, and that's why I want to just back out because I was younger and I wanted to blow more money, so I just took it out and then bought it in. As for right now, what was the question again?
Why do you what was your first strategy when you got into stocks?
My first strategy was
Just for like your beginner strategy. It's okay, you can
for me, like initially I wanted to long term invest. I wanted to hold on to something and just keep it there for like a year or two and just watch it grow. Cause I'm the perfect type of person just to like sit back after I do something and then just watch it grow more like a tree. Like I like watching something and then just seeing it grow. It satisfies me, and like
you chose the right stock.
that I chose the right one, and it's like I don't have to put that much effort or work into it. I just choose it, and then I knew that I have confidence that I chose in the right one, and then I just sit back, relax, and watch it grow.
It seems like you like growth stocks.
I really like growth stocks a lot.
You like dividends or growth stocks?
I like growth stocks more than dividends.
You like the ones that can increase within 1 year, huh?
1-2 year, yeah.
1-2 year.
Yeah.
Interesting. I didn't know you were like a long term investor at first.
It didn't seem like it, right?
Uh-huh.
Yeah. I didn't think I would be either. I thought I would be like really into options, but then I tried it and it's too hectic. Yeah. So what is it that really got you into investing other than your father? Because you just said your father made it, like what it sounded to me was like your father was into it, so that kind of got you into it. Wasn't there anything else? Because like I saw you like 3 months ago after not seeing you for like a year, and then you just told me like I have like one Bitcoin already.
Okay, so long story. I didn't really know much about crypto or anything. I just recently got into it like in May or April, May of last year, 2000.
This
it was
year?
still this year, 2019 still. So
Mm-hmm.
I didn't know what it really was. So at first, I started researching what Bitcoin was, and I got really interested in it because it was a deflation. That's what intrigued me the most, deflationary asset. So that's what first got me to trading, like trading in general, not just stock market. And as I got into Bitcoin, I noticed that it went like everyone knows it went to 20,000. So I just like that it has I like volatility. I entered Bitcoin at like 9,000 and it went into 12,000 in 2 weeks in June.
Wow.
So like that's what first got me into it. I just said why not just try it at first, and then once I started, I won that much without even looking at much technical analysis. I was like, this thing is a monster, and then I sold.
Before you entered, were you scared when you entered? Like, oh, what if I lose all my money? What if it just goes down? Like, did you have that fear?
I only put $200. That's the thing.
Uh-huh.
I was like, I looked at the chart and it went up. This is when I didn't know much, so I guess I FOMOed in, but
Yeah.
I didn't know much at the time, but it went up, and then I sold when it just got to a percentage that I was like, I just don't want to pull out because it went down a couple times before I actually sold it. It went up to 13,800 and I sold at like 12,500 because it went down. So I sold, and then what got me really interested was when I started losing. I started buying more and I started losing, and I'd also join signal groups, which is bad. That's when I didn't really know much. And that's what I don't recommend. I recommend once I got better was when I started doing my technical analysis by myself and then like improve. So that's just an experience I want to share. Like you should never use anyone for like signals because the best signal for yourself is when you can use when you work on it yourself and go through the experience because you know when to sell and when not to. Because sometimes they don't tell you the or when you have to ask and it's already too late. You know what I mean? So like it's better to just do the technical analysis and know when it's the right time to exit yourself so you have confidence in the play.
Yeah.
That's how you stay emotionless. Just make sure it's good signals and buy when it's at its. But yeah, basically buy when it's a good signal, when it tells you good signals from indicators.
Yeah, I agree.
So that's how I got interested in it. I won the first 3,000 run. I was like, this thing is crazy. So I'm just at the moment it's just consolidating. So I learned a lot of technical analysis during that time, and I fell in love with technical analysis. I didn't know anything about technical analysis a year ago, and then I just kept going at it for like 6 hours, 7 hours, or 6 to 8 hours a day, and then I just really got into it. So
what got you really hooked was, would you say that what got you really hooked was you putting that $200 and then seeing that return of investment coming in, and then you being like, oh, I can make money without having to actually work for it.
Yeah, I didn't have to. Yeah, like I remember when I used to work part-time, and then it was like really, it took a lot of time, and like I wasn't really improving my life in terms of like how I really want to, you know what I mean?
Yeah.
So like when I did trading, it's just like you can actually make money off this if you actually put in the work.
Yeah.
And it's like I've won, like you and me, we both won many times where it's like the money put in is more satisfying than working at a part-time job that you don't like.
Agree.
Right? It's just like I put in the work, I did the fundamental and technical analysis research. It takes time, and then if you enjoy it, it's really fun. And like once you make the money, you're like you get confidence and experience as you grow, and it feels really good.
Yeah.
And then you slowly get better, and you develop your own mindset and then your strategy, and it's like you basically work. You can make money in your sleep, depending on your strategy.
It's really a process.
Would you consider working full time as a
trader?
Trader?
Easily, bro.
You'd want to be
hell yeah, bro. That would be a dream, bro. I want to have to go anywhere. I could literally
you
just wake up.
Your style would still be the same, right?
Yeah.
Like, just like long term, right? No trading, huh?
I would just wait for like the annual upcoming earnings and then just look at those and like see if I can see how it affects that stock. If it does well, I buy more. If it doesn't do well, then like I just wait it out and then see how the other upcoming earnings, because it's 4 in total, 4 quarters in total.
When do you plan to do full time? Like right now, because I know like we're all interested in the stock market. We talk about it every day. I go to your house every day to like we just talk about stock market every day. Just like on our free time, you know, because we just really enjoy it. So when do you plan on being full time, or when do you plan to? Like, there's no rush. I'm just saying, when do you think it's ready for your time?
Once I have like 100K portfolio, and then I can make the days end from the daily gains I get, percentage gains I get. So say I have like 100K portfolio, and then every week I can get like 1,000 or 2,000 off that, and I could just live off that. Then I would consider going to a full-time trader. Other than that, I would still need a job just because I need that stable income coming in to support myself and my living style.
So in the meantime, you're gonna work for now, and in the meantime, what you save up, you're gonna just work on the craft, and then you turn full time when you have enough money.
Yeah. So say the bear ETFs that I put in really do go off, and like it crashes within a year or two, and it really does go off, then I would retire. Like I would just stop working and just go into investing full time from there.
Full time?
Yeah. And then just work on the server and YouTube channel from there, like full time.
Full time.
Without no hesitation, bro. Just go all in for that. No hesitation. You're considering it too, no?
Yeah, I'm considering it, man. Like,
yeah, it's fun.
It's fun. I'm still gonna work for sure for the next. I don't know. We'll see. You never know in life, you know. Yeah. But just for now, maybe like I need, like you said, I need that steady income, you know. Like I don't want to trade when I'm in pressure, like when I have to make money to survive.
Yeah.
So I want to work for now to make that income first, and then like just slowly develop my trading while we do that, and then work on my trading, and in the meantime, yeah, just save up capital so I can just improve at the moment until
Yeah.
maybe like you said, 10 years in the down like in the 10 years from now, like we'll be more experienced from here. You know what I mean?
I think 2-3 years of us doing this consistently will get us to a level where we can do it full time. 2-3 years of us doing this really consistently, like every week we really putting in the work. I think we can get there in 2-3 years. It's very possible. Maybe under that. Maybe even under that.
So what is the best fundamental sign that a company is solid? Where is that located in the financial reports?
In the financial reports, look at the revenues. You want to see yearly, each year or each half of year. That's called the. They do quarters, and they also have the upcoming, like most recent upcoming earnings from the quarter, and also they have like half years and also yearlies. So you want to see the revenues, the retail, and the net profit from which they gain. And if you see that continuously going up every year from a 5-year span, and you just keep seeing growth into that every year, then fundamentally that company is sound. And also you would want to look at the 10 Qs. That's what 10 Qs I say are the most important fundamental analysis that you can get. And then it comes, I think it's 10 Qs, upcoming earnings, and then the 10Ks. 10Ks is just like a rough, it's like a rough draft of what the company wants to accomplish, and like what the company is really wants to do with their brand and what they're providing for the consumers out there. That's the 10Ks. And then yeah, so the cost of sales and also operating expenses, you want to see that go up as well. Just because the operating expenses you want to see go up, because operating expenses is under category of also like research development and properties, the employment costs. So if you see that expense going up, that's also a good sign. Don't think of it as a bad sign, because every company has expenses, and you want to keep seeing that company go up. That because that means they're putting back the money that they earn back into the company. So you want to consistently see that. You want to consistently see that companies putting back the money that they earn back into the company, because they know that this company is going to grow even bigger, and so that you're going to see more retails and then more revenues going up.
Interesting. So yeah, I really like that detailed answer from my question. So what is the hardest lesson you learned while trading and investing? What was the hardest? One of the hardest questions.
Hardest questions or
Oh, sorry, hardest lessons.
hardest lesson that I learned from this market would be knowing when to buy and knowing when to sell, for me personally. Because for me, I would sometimes I would feel the FOMO and I would buy when it's not really at the support. So I'll buy like at near the middle or near the lower end, instead of waiting like a week or two of when it actually goes down to support. So I would see red and then see the green after a month. And then sometimes I would even wait more, because I would think that would go up even more. But then that's not the case. That's not always the case, because it will like consolidate, and like maybe it will like consolidate lower. So that was the main problem and lesson for me, was to buy at the support line and then sell it when it's at a target price of at the bearish, at the bullish, I mean, at the bullish trend. So like essentially buying low and selling high. That's the most common lesson that you hear from most investors and traders. But you really want to actually put that into put that into perspective and actually use it, and use it perfectly. Because if you really buy low and sell high, then your profit margins, you see that your gains will substantially increase and you always come out on top if you do this correctly. For you, what would be the biggest lesson?
So the biggest, or the early stages, I would say, when after I got into that $9,000 to $12,000 run, when it was up to 14,000 and it stopped, was FOMO. Like I had FOMO in the beginning. I would buy like 11,000 and go down 10,300, and then I would sell and it would go back up. Those was the beginning times, and then after I would learn how to do dollar cost average, and that kind of helped me out a little bit. However, I would still buy high. So after a while, I improved. So I definitely improved from back then. However, one of my hardest lessons right now is just dealing with over trading. I feel like when I try to predict every movement of the market, sometimes you won't be right. So, like, I would want, like, the hardest lesson is knowing to, like, sometimes just sit out a couple trades. Like, because then sometimes let the market tell you what it's trying to do. Like, it might have a big spike and then you could play off that versus trying to be in that spike. It could go up and down, essentially. Because, like, I'll have success predicting the market like 1 to 2 times, like just based off what the market is telling me. I can get the first two right, but then like if at the third one I'll try to guess where or predict exactly where it's gonna go. It's something that goes the wrong way, but that's where I also use stop loss now. But just over trading to the point where you try to guess every movement of the market. I'll get the first two right, but then the third ones, if I just over trade and I get lack of signals compared to previous patterns that I won off the past two trades. So the third one I would lose because like I would be over trading, trying to just think that the market is gonna do what I want.
And sometimes you can lose out on other good trades or investments that can possibly be there. However, since you're in that other trade, you can't really get into that good one because you felt the FOMO or you went in too much.
Yeah, over trading.
Over trading.
Let the trade come to you.
Yeah, let the trade come to you. Try to make as less decisions as possible.
Like, yeah, like because remember we talked about my father doing 2 to 3 trades. Because I trade like every day. Like I would trade like 2 to 3 depending. Like when the cryptos are hot, I could trade like 2 to 3 times a day. Like I can make 2 to 3 positions in one day, like short or long. I could just be in two. But like I said, once the first two I make a lot of money. Like just like poker, right? Like when you or Texas Hold'em, like when you overplay, like sometimes you have to sit some out. Like you can't just always like go in with all your money. Like risk management as well.
Yeah.
Risk management is another one. So yeah, and when you do poker and stuff, like you can't win every game.
That's a perfect one.
I know you play poker, not poker, blackjack. So I want to know your thoughts on that.
Well, that's a good one to compare it to, because in poker you want to wait until you have the best hand possible for you to win. So you have the biggest advantage. So either you have like ace king or like king or any pairs or like a good high card. You just want to have the best possibility of winning with the current hands that you're given. So you want to enter in the market when you have the best given hands, and then play that one out, and then really try to win big on that one. And then just if the market doesn't really give you good hands, then don't play it out. You're not forced to play it out.
Yeah, exactly. Like when you're waiting patiently for that moment, just like in poker, you're waiting for that or blackjack, you get that 21. You're just waiting patiently to roll it out. Like you're not gonna get 21 every time. So like just like in trading, when you have to wait for that perfect moment to put in all like a good amount of money because the odds are in your favor. So like for example, if Bitcoin hits your price that you want and then you've done the TA and like you have like multiple signals that's gonna go up, you can bet more money with the stop loss and bet more money because you've been waiting for that lower price, like the lowest price that it can go.
Yeah.
And like you win the most right there because you've been patient rather than trying to put a lot of money in on like just not as good trades. Like you don't have 21 in blackjack.
Or like pocket aces for poker.
Yeah.
Okay. All right.